Hi everyone. So my name is Taryn Garlock. I am an assistant professor and extension specialist at Auburn University, and I'm going to talk briefly about the U.S. oyster market. And so I'll go over oyster supply and both domestic production as well as imports. Then we'll talk a little bit about demand and pricing, and then I'll finish up with talking about some of the key opportunities and challenges that I see for the industry. All right, so as most of you probably know, we've seen a dramatic increase in production and demand of oysters over the last decade or so. And so this has largely been driven by demand for half-shell oysters. And so oyster aquaculture has grown quite rapidly to meet this demand, and it's really supported the movement of oyster sales beyond these traditional raw bars. And so now you can find oysters on the half-shell in fine dining restaurants, as well as in casual dining restaurants. And so we've seen oyster consumption increasing, and for the first time, oysters are now one of the top 10 consumed species in the United States. And so about a quarter of a pound are consumed per person per year, and this was in 2022. And so this number is just expected to continue to grow. Okay, and so let's take a look at U.S. oyster production. And so this figure here includes both farmed and wild production. And so as you may know, there are significant data challenges associated with the collection of data for shellfish, including both non-standardized reporting by the state agencies, as well as reporting that doesn't distinguish well between farmed and wild. And so this figure is showing both here. And so farmed production typically goes to the half-shell market, whereas the wild production often goes into the shucked market. And so in this figure, you can see that total production is declining over the time series, with a significant drop in 2020 associated with the pandemic, but also in 2022 and 2023. You can also see that this figure is broken up into production by region, and you can see that a lot of the decline in overall production can be attributed to the Gulf region, which is largely producing wild oysters. There is also a decline in the production in the Pacific region, which is largely producing farmed oysters. Production in the mid-Atlantic has actually increased in the last couple of years, and a lot of that is due to increased production in Virginia and Maryland. And so, like I said before, we don't have the data to separate farmed production, but based on how these different regions appear to be trending, farmed oyster production is probably stable. We have seen that growth in new farms is slowing after we've seen a long period of very rapid growth. Now, just to compare oyster production in the U.S. to the global situation, this figure here is showing the compound annual growth rate. And so you can see in the United States, it was 0.2%, which was quite low compared to the global situation, where it was 4.6%. And so pretty significant differences in terms of total oyster production in the U.S. relative to the global situation. So now let's look at the U.S. oyster supply and the different shares that each of these sectors contribute. And so this data comes from a recent NOAA fact sheet that was published. And what it shows is that about 32% of the U.S. oyster supply came from aquaculture, about 26% came from wild fisheries, and then 42% came from imports. But interestingly, if you look at the estimated value of these different sectors, you can see that aquaculture makes up a much larger share of the total value of the oyster supply. And so aquaculture makes up about 43% by value, wild makes up about 31% by value, and the imported product makes up only 26% by value, suggesting that what is imported, while this might be higher in volume, it's lower in value. Now let's take a closer look at imports since they make up a significant share of the market. So this figure here shows imports by product form. One of the most noticeable things in this figure is that the imports of oyster products increased significantly following the pandemic. And so this is, I think, most obvious in terms of live farmed oysters, that dark blue segment on the bottom. But we also see pretty strong increases in canned as well as canned smoked oysters following the pandemic. However, it seems like imports of those products have declined since they peaked in 2022. And I also think it's important to note that most of the canned and the smoked oysters that are consumed here in the United States are sourced from overseas, are sourced from imports. But perhaps more interesting to this group is that imports of live oysters have remained quite high. We see a slight decline in 2023 and 2024, but they're still, nearly double what they were prior to the pandemic. Okay, now looking specifically at live imports of oysters, this figure shows where the oysters are coming from, the country of origin. And so a little less than 2/3 of these oysters are coming from Canada, and they're mostly staying and serving markets in the Northeast and Mid-Atlantic. A little more than 1/3 of live imports are coming from Mexico, and those are typically staying on the West Coast. And so these imports are probably having somewhat of a minimal impact in the southern market. But as you can see from this graph, importers really took advantage of the lower domestic supply in the pandemic and have been able to establish these markets in the United States. Now, I just wanted to quickly show monthly imports of live oysters to show the strong seasonal pattern in imports. And so as you can see from this figure, imports peak in the summertime in June and July, and this could reflect a couple of things. First, it could suggest higher seasonal demand for oysters as restaurants typically have higher traffic during the summertime. It could also potentially suggest lower domestic supply, and this could be associated with the summer mortality events that the industry as a whole is facing. Now looking at the price of live oyster imports, it's important to note that these import prices should be considered very similar to a wholesale price. And so first you can see that the Canadian price is much higher than the price of oysters from Mexico. The price in Canada averaged about $5 per pound throughout most of this time series, but we have seen over the last couple of years as the Canadian price has increased due to lower production than usual, and so the price is up to about $6 per pound. You can see that the price of oysters from Mexico is significantly less at about $2 per pound, and that price has been relatively stable, especially in the last couple of years. Now, wholesale prices, for U.S. production is generally about $4.50 per pound, and so it's somewhere here between these two. Unfortunately, we don't have good data on U.S. farm gate prices, but anecdotally, we're hearing that they've been flat, and this is despite increasing input costs, which are squeezing profit margins for farmers. And while the farm gate price has been relatively flat, we've seen the price the consumer is paying keeps increasing and going up and up. So let's talk a little bit about the half-shell market. And so the majority of oysters are sold in restaurants. And we've seen that the food service industry has rebounded quite dramatically since COVID. And we've seen kind of a rebound in the oyster market as well. And so the figure here shows in blue food service sales. And again, you can see that that's rebounding quite strongly. Now, the one thing we see is very late in the time series in the last few months, we've seen that there's been a slowdown in food service. And this really corresponds well with what we're hearing from the industry, where there's generally an overall softening of demand for oysters kind of since the start of 2025. Now, the retail market for live oysters is fairly limited, I think largely due to consumers not knowing how to shuck oysters. But some of the retail scanner data that's available shows very strong seasonal patterns in retail oyster purchases, where they're, significantly higher in December, around the Christmas holidays. And so one of the reasons we are possibly seeing the softening of demand is due to persistent inflation. And so inflation has come down, significantly since the pandemic, but inflation in food away from home sales is still quite high, around 4% year-over-year change. And this is compared to kind of 2.5% to 3% year-over-year change prior to the pandemic. It's also interesting to note that grocery inflation has gone up significantly over the past year, and this is particularly true. We see a jump in August of 2025, and this is when many retailers have said that they would have to pass on these price increases associated with the tariffs to the consumer. I think one positive note for the industry is that the majority of oysters are consumed by these higher income groups, and these higher income groups are less likely to be influenced by inflation. And so the overall impact of inflation on oysters, I would expect to be less than some of these other seafood commodities. So to wrap up, we're hearing that farm gate prices are flat. Meanwhile, these input costs are increasing, and so profit margins are getting squeezed. And so increasing on-farm efficiency is going to be key for going forward. Demand has also been strong, but it does seem to be softening. And this is probably due to persistent inflation, which may get worse before it gets better. And while overall demand seems to be fairly strong, there may be opportunities for local saturation. And so finding new markets might be necessary, and specifically at certain times of the year when the market gets flooded. So I think there's significant opportunity to expand retail sales. Most of this will likely be in terms of value-added products. But we have to be careful because I think there will be significant competition from lower valued imported products. Another challenge I see in terms of accessing new markets and supporting increased production is distribution channels, particularly for Alabama and some of the other Gulf states. It's unlike the Northeast and the Mid-Atlantic areas where they're very close to these large metro areas. And so our production locations are generally further from these larger consumptive markets. And so I think, better distribution channels are going to be needed to support market expansion. All right, and so that's all I had. Thanks for watching. If anyone has questions or would just like to chat, please feel free to contact me. My phone number and email are listed below. Thanks again for watching, and I look forward to hearing from you.